How geopolitics is quietly impacting your investments. Have you ever wondered why markets suddenly rise or fall, even when nothing seems to change in your daily life? The answer often lies far beyond company earnings reports or economic data. It lies in geopolitics, the complex web of global power struggles, alliances, conflicts and policies that quietly shape the financial world around you. While it may seem distant or abstract, geopolitics has a direct and sometimes surprising impact on your investments. Let's start with a simple idea. Markets hate uncertainty. Whenever there is political tension between countries, whether it's trade disputes, military conflicts, or sanctions, uncertainty rises. And when uncertainty rises, investors become cautious. This often leads to stock market volatility, where prices swing more dramatically than usual. For example, when major economies impose tariffs on each other, global trade slows down. Companies earn less, supply chains get disrupted, and stock prices react accordingly, even if the companies themselves are fundamentally strong. Another important factor is energy. Geopolitical events often influence oil and gas prices. If there is instability in regions that produce large amounts of energy, supply can be threatened. This pushes prices higher. When energy prices rise, it affects everything, from transportation costs to manufacturing expenses. As a result, inflation can increase, and central banks may respond by raising interest rates. And as interest rates go up, borrowing becomes more expensive, which can slow down economic growth and reduce stock market performance. Currencies are also deeply affected by geopolitics. When a country faces political instability or economic sanctions, its currency can weaken. On the other hand, countries seen as stable and safe often experience stronger currencies. Investors tend to move their money into what are known as safe haven assets during uncertain times. These can include gold, government bonds, or stable currencies. This movement of money can shift global financial balances and impact the value of your international investments without you even realizing it. Geopolitics also shapes entire industries. For instance, tensions between major powers can lead to restrictions on technology exports or increased investment in domestic production. This can boost certain sectors like defense, cybersecurity, or local manufacturing, while hurting others that rely on global cooperation. If you're invested in the stock market through funds or retirement accounts, these shifts are already influencing your portfolio behind the scenes. In the end, geopolitics is like an invisible hand guiding the markets. You may not always see it, but it's constantly at work, influencing the value of your investments. By understanding its role, even at a basic level, you can become a more informed and confident investor, ready to navigate a world where global events and financial markets are more connected than ever before.